Hi, my name is MJ Ryu, a financial advisor. Investment is very important as time goes by. But why? Why is it so important? I carefully assume that Jane and Tom have not invested before, but I'm glad that you guys have realized the importance of investment. You guys are already better than 42% of the US population because only 58% of the population invest. And why do we want to invest? Because we want to make a lot of money so we can have financial freedom. Warren Buffett, one of the richest people in the US, said that if you don't find a way to make money while you sleep, you will work until you die. So how can you invest? There are many types of investment, and then I narrowed down a couple of investment. Real estate, stocks, bond, arts, collectibles, precious metals, mutual funds, and real estate. There are almost uh, always a risk in investment, but generally, people invest and don't want to lose money. So we are introducing two types of investment: mutual funds and ETFs. What are those and what is the difference? General differences are with mutual funds. You buy and sell based on dollars, not market price or shares, and you can specify any dollar amount you want. With the ETF, you buy and sell based on market price, and you can only trade full shares. For ETFs can help you build a strong foundation for long-term investment for portfolio, and has a less beta, which means a volatility, another word for fluctuation throughout market ongoing. How higher beta or volatility is very ineffective when it comes to long-term investment. ETFs are more tax efficient and more liquid than mutual funds. This can be great. This can be great for investors looking for to wealth over the long haul. So, is ETF better than mutual fund? Not necessarily. This is because a lower beta projects higher stability but also lower return. On the other hand, mutual fund, which tends to have a higher beta, comparably less stable but higher return. So it's all depending on what types of investor you are, and invest tendency can differ as well. Is there good results for these types? Yes. And is there also risk into them? Of course. However, surprisingly, these are the types of investment well known for safest types. According to Jane and Tom's situation, there's not much of a capital and no backup capitals. So we cannot lose this money. So I would carefully recommend ETF funds where risk exists comparably less. Before we jump in, we also need to be aware of a Nasdaq and S&P. To briefly explain, the S&P 500 tends to be broader, hoping to have a bigger representation of companies from various sectors and industry groups. And the Nasdaq composite includes only stocks that are traded on the Nasdaq market. Each S&P and Nasdaq efficiency of results is shown in this graph. It may seem Nasdaq has a 4.06% slightly higher efficiency. Also, this is showing that which index has more risk than the other. There are not much of a difference. It is commonly said that 1.0 or below is adequate beta. And this graph is showing beta average between ETFs and mutual funds. Like I mentioned, the mutual fund may create better results, but also risk follows. Do you know founder of a Berkshire Hathaway? Yes, it is Warren Buffett again. And he said, do not take yearly results too seriously. Instead, focus on 4 or 5 years average, which means that we should focus on long-term investment. And we are going to start from the top 20 efficient funds, and because efficiency is solely based on 3 years and when peak of COVID-19 occurred. It may seem like um, it may seem like efficiency of ETFs and mutual funds are well distributed. However, about 13 ETF funds have shown out of 20 in this graph. So I am going to take those 13 ETF funds and investigate. On the top of that, in order to invest for long term, stability is a key role, which means a lower beta. This is a bottom 50 beta throughout the ETFs and mutual funds both, and they are all ETF funds. So ETF has a way less risk, and this is a result um, of her year-to-date return of those sorted 13 ETF funds. Consistently doing well, funds are UNL, FCG, YCS, SOYB, and TNA. And these are the six categories that have a best efficiency results from ETF funds. And I recommend the five categories. Commodities broad basket, consumer defensive, a miscellaneous sector, neutral resources, equity energy. Most of categories are resulting in quite great outcomes. And this is a 1 year return of 13 ETF funds. A top four appears to be UNL, FCG, YCS, SOYB. And this is a 3 year return of 13 funds, and I consider as a medium term investment time. Top four are TNA, FCG, LIT, REMX, and we need to pay attention to this because this results is including COVID-19 depression. On TNA and FCG, funds survived very well and maintained their results even during COVID. Now, this is a 5 year return result, and I consider long term investment. The top four are TNA, QCLN, UNL, IYK. And finally, this is a 10-year return result. We also need to be attentive on this one as well because this is the longest term analysis. Top four are TNA, TAN, QCLN, PSCC, IYK. And my best recommendation is Invesco Solar, which is TNA, which is also was under the category of a miscellaneous sector, and FT Natural Gas, FCG, which was under the category of Equity Energy Fund. Because of from first year and third year return, FCG stayed at top two of return, which tells me that it is a fast growing and stable during COVID depression with a very high efficiency. And for TNA, it has taken place in the market for a long time with a very stable volatility and outstanding efficiency. Thank you.